Welcome to episode 102 of the Live with the Maverick podcast. The theme for today's discussion is risk management part 3, and we're very excited to have with us our guest, 𝗠𝗵𝗇 𝗠𝗃𝗍. Monica is head of business risk and insurance for Google Cloud. Also, in 2022, Monica was honored as a business insurance woman to watch. So welcome, Monica.
Thank you so much. Thanks for having me.
Pleasure to have you, and just love to give you an opportunity to introduce yourself.
Yeah, absolutely. I'm 𝗠𝗵𝗇 𝗠𝗃𝗍. Thank you for the intro. I lead risk and insurance at Google Cloud. I also lead Alphabet's actuarial team. I'm part risk manager, part actuary, part product, part program manager. There's a lot of different things I cover, which we can get into. Prior to Google, I worked at 𝗪𝗁𝗏 Hathaway. I led global pricing there. And then prior to that, I worked at Willis Towers Watson. When I joined, it was Towers Perrin, so I kind of saw the journey there, and I did actuarial reserving.
And Monica mentioned Willis Towers Watson. One thing I always mention, I don't know if Monica remembers this. Monica actually assigned me my very first PNC project way back in, I won't even say the year, a little while back. When I was working in Miami, I was on the retirement side. So I remember Monica assigned me like a very small reserving project. So that was my first intro to
That's
to
such a great
PNC.
memory for you to bring up. I had forgotten about that. So that's awesome. Very cool.
Yes. Yeah. So, I think this is a really cool theme. Risk management, when I think of my Maverick Actuary brand, I think of it in terms of some of the focus areas, of course, actuarial science, risk management, and then I say advanced analytics. And to your point, risk management, there's clearly some overlap. Well, they say insurance and risk management. So the two terms certainly at times overlap, but there's a little bit of a separate and distinct piece. So I'm looking forward to exploring that piece today, the risk management side in particular. So the first thing I want to ask is when we think of the term risk management, honestly, for the average person, perhaps a bit of an esoteric and ambiguous term. So if you were, what does risk management mean to you? If you were to describe that to someone in very simple terms.
Yeah. So when I think of risk management, I think about how do you protect the company from the downside of a potential business opportunity, let's say, without holding back the upside. So what can you do to help mitigate any risk that might be present by a certain decision? Insurance is one of those measures, but also there's a bunch of other measures, whether it's contractual terms or just putting safeguards in place. So it's a pretty broad category. I think that risk management can apply in a lot of different areas, but generally speaking, it's how do you protect the company while still enabling innovation?
Excellent. And honestly, I don't like to insert myself in the conversation, but I did actually make an attempt at this on a LinkedIn post. I'm just going to kind of share briefly with you. I just kind of tried to present like a 3-step kind of framework towards risk management. So I think of it in terms of 3 things. First is identification, is what risks exist. Very broadly speaking, whether it's like you said, a company or an individual. The second thing is what I call dimensionalize, and that's essentially like categorizing the risk, but also acknowledging that there could be things like correlations, aggregations, and then quantifying them to the extent that you can. And then the third piece of my framework is strategize. So to your point, it's not just about insurance. You can avoid the risk, you can fully retain the risk, and then there's a spectrum of things in between you can do. You can mitigate, you can transfer. So that's how I think of it. I've been just trying to find ways to simplify it, because I know when we speak to people, one of the things I like to do is explain to people in the broader society who are not in the space what we're doing. So I just wanted to share that with you and see if you had any thoughts on that, that thought process.
I think that's great. I think it encompasses all different parts of it, which is awesome. Oftentimes, just in my day-to-day work, you'll see people focus on a certain area. So maybe a certain team will focus on a risk taxonomy, which is more identifying the risk. You might have a different team that's trying to quantify it. Our actuarial team could be an example. And putting those all together as a holistic framework, I think, is pretty important, because people have different skill sets and they'll naturally lean towards one or the other when really it encompasses everything that you've outlined. So that's great. I'll have to check out that post.
Yeah, sure. I'll try to find it. It was a few months ago. And I did many different drafts, because sometimes it's just tough to get that technical part just into simple terms.
Definitely.
No, Now, when we take a step back, we talked a bit about risk management, but when you take a step back and look at the broader risk landscape, how would you describe the risk landscape today? So, you're at a company, you're at a tech company, you're focused on risk management, not only for the company themselves, but I know Google does have cloud solutions that other companies use. So just when you take a look at that broader macro piece, and we'll get into more details on the cloud piece, but just when you think of the risk landscape, how do you describe the risk landscape today?
Yeah, and I'll speak a little bit more broadly than just Google, just kind of
Sure.
many companies are facing this, I think, at the moment. But from a risk landscape perspective, I think it feels like the rate of change of risk in general and what we're facing is increasing over time. So I think that we're in an environment where, whether it's through cyber risk or AI risks that are emerging and how that affects our society and our businesses, right? Or whether it's through climate change and increasing hurricanes or wildfires, we're seeing a constantly changing risk landscape in many different areas. Even casualty, I understand settlement values and social inflation are increasing pretty sharply. And so just broadly speaking, I think we're all operating in a time at which we have to be aware of what risks are emerging, what's the state of them today, where do we predict them going, in order to protect our companies and ourselves from the impact of those risks over time.
And what you said, what I'm hearing there, the rate of change, that's a key theme in terms of the landscape itself. And personally, I think that's what makes it exciting, not just to be an actuary, but a broader risk professional today, is that the risk is evolving. A few years ago, when I did this TED Style talk, I talked about the fact that actuaries, that when you think of what actuarial science is predicated on, is historical data, looking at things like organizing data in triangles, looking at loss development patterns, because you're using history to learn from the past to project into the future. But what happens when the history doesn't exist, or the history is entirely disconnected with what we're seeing today? So I think personally that makes it exciting to be, in the insurance and risk management space.
Definitely. Yeah, I agree. And then you become really good at assumptions, like coming up with assumptions, testing those assumptions, trying to understand the impact of them. But the quantification piece is changing as the risk landscape changes as well.
For sure. No, Google. Let's get to Google. That's one of the exciting parts. So you spent, no, I think, correct me if I'm wrong, the last 6 years, or the past 6 years at Google in
That's right.
various roles. So how would you describe I know you've focused very heavily on risk management in a few of those roles. So how would you describe the risk management roles that you've held at Google?
Yeah, so I started, just for context, I was an actuary prior to joining Google, and Google was my big shift into risk management. And I started at Google in what we call a risk consulting role. And so the concept here is that Alphabet is such a big company. We do all of these different things. And so it's really easy for the insurance department to be in a situation where they might not be aware of everything that's going on in the business, because it's just such a big company. There's so much happening, right? And so we split the team up, and we had 3 different risk consultants. We still have them today, that will integrate with the business units and really understand the risks inside and out, so that we can then make sure that we're transferring that to our insurance program. So I started out as a risk consultant. When I started out, I had all other bets. So you have Alphabet as the parent company, you have Google, and then underneath Alphabet, we do a lot of different things. Waymo is an example with self-driving cars. Verily is an example that is in the health space. So I had all other bets, Google Cloud as well. And then throughout the past 6 years, I've kind of segmented my portfolio over time. It's like those roles are like you're a risk manager for that section, right? And currently I have Google Cloud, Workspace, and Chrome. And it's really just everything from working on the contract terms, to advising the business on risk management more broadly, to thinking about different product development or different ways that we can leverage insurance in our in our product portfolio. And so I can talk to you a little bit about the risk protection program, which is one of those examples at some point in this talk. But it's been interesting. And then 2.5, 3 years ago, I took over the actuarial team. So I run a team, it's a smaller team within Alphabet's insurance group that will quantify all of the risks that we have so that we can then have an internal view on those risks, both for the business to help make decisions, but also to try to evaluate the insurance quotes that we're getting and try to make insurance decisions.
Excellent. So, something that people may ask, because you're an 𝗪𝗃𝗲, I'm sure and previously you were in insurance and you also did consulting. Sure, you had many other alternatives and opportunities. What is it that drew you to Google specifically, if anything?
Yeah, so that changed once I got into the company. So I'll start to what drew me and then what I love about it. What drew me here was really having a different experience, right? So I think as an actuary, I'm a big proponent of actuaries trying out different areas within insurance. I think they do a really good job often when you understand the numbers side of the business, and then you go to a less data-driven side of the business and you can bring that data-driven approach. I think it really adds a lot to insurance. There's so many successful CEOs or chief underwriting officers that really came from an actuarial background. And so what drew me to Google was this idea that I could move into risk management and leverage my actuarial skill set, because Lauren Nickel, who's Alphabet's risk manager, runs Alphabet's insurance team, was an actuary himself. So I knew that I'd become joining a group driven by a leader that had that understanding. What keeps me at Google is that the company, and I think many tech companies can be like this, is really focused on innovation and how can we do things differently and how can we do things better. And when I often say, I forgot exactly how I phrase this, but I often say that innovation lies at the intersection of two different subject matters or industries, right? And so if I can come into Google and bring the mindset that everything I've learned from being in insurance and being an actuary, and then merge that with a tech mindset, I think we come out with a better outcome. And so I work a lot with the business to think about how do we use the principles that we've used for many years in insurance, like quantifying risk, and then apply that to help our customers.
Excellent. And I as someone who is in software, so very close to the tech world or overlapping with the tech world, can certainly reiterate that, I'm a big fan of actuaries trying different things. So,
Awesome.
Thanks for modeling the way there, and just excited to have you speak to that experience. Now, you've made this transition. So you're an actuary, you've gone from the traditional world into Google in the risk management role. So what is it like working in risk management as an actuary? What are some of the similarities, differences, some of the exciting things? I know you mentioned innovation, but just thinking of that transition, as you're going into a role that's very different. What is it like?
Yeah, I think I'll start with like how actuaries can bring their skill set, or how I'm bringing my skill set into a risk management role and how it's helping me. I think at a tech company, there's a lot of everything's data driven, and there's a lot of interest in utilizing data in a meaningful way to make a decision. And coming in as an actuary and having that background of being very comfortable with how to quantify risk, whether it's an established risk like auto liability that has a lot of history, or whether it's a newer risk, I feel like we all learn a framework for how to go about that. And so that's been one of the things I've leaned on actually more than anything, even if I'm not in an actuarial role all the time, working to try to bring numbers to the conversation, and whether it's insurance purchasing decisions or whether it's trying to convince a business unit why they should implement certain risk controls. If you can tie it to numbers, I think it's a better story. So that's been one of the ways that I've kind of brought actuarial mindset into risk management.
And what are some of the things that are different? Like, I know, Google is obviously a tech company, so I imagine the culture may be different, but just fundamentally from being in a risk management role, what's something that may be different?
From risk management to actuarial, or risk management?
Oh, sorry, the other way around. Yeah, from like the traditional space into risk management. So like going from like working as an actuary in like a regular insurance company,
Yeah.
like classic pricing or reserving role, to now being in Google in risk management.
Yeah, so one of the biggest things I think is that people think that, oh, it's Google, you have like a bunch of data and there's so much that you can do. And there's definitely truth to that. But I think what people miss is that we're just one company, right? So when you're at an insurance company, you have a whole portfolio that you can pull from of losses and exposures and underwriting information and all of that. Whereas with us, we're just one company. So I think that was a big shift in terms of moving from one side to the other. We use a bunch of different data sources from within the company, of course, and then outside. So we'll leverage different data sources. It's not that we're doing things without data, but we're still, when you compare it to the insurance world, we're still one company. So that's been a big shift. The other shift is a lot of people will ask me just for career advice of, should I move into risk management? And I generally say it's really good to have a good footing in the insurance world before you move into risk management, because when you're in risk management, you are the insurance expert for the company. And typically it's a small group, right? And so there's not a lot of people that you can look to for advice upwards. Like, you become that person that everybody in the company is coming to for advice in the insurance space. And so it's good to have a good foundation. So that I think is pretty different as well. And then working as a risk manager, your whole mission becomes whatever the company's mission is, right? And so I might be in insurance, my background might be an actuary, but I'm spending my time getting up to speed on all things tech, understanding like how what's going on with Google, how that compares to some of our competitors and what's happening in that space. Whereas when I was in the insurance space, you're really more focused on the insurance industry and what's happening with the insurance industry. So I'll often get asked to like speak on panels about the trends in insurance. And really, I'm more focused in my day-to-day time on the trends in artificial intelligence and cloud computing and cloud security and other things. And so it really shifts your focus. So those that are going to go into risk management, think about what the company's actually doing and if that's something you're passionate about.
Yeah, when you talk about so breadth is a theme I'm picking up on when you differentiate the broader risk management world from simply insurance.
Yep.
So in that vein, what are some specific examples of risk management projects that you've worked on that, again, might be different from what you may see as an actuary in an insurance company?
Definitely. So I'll just start with the basics to ground us, and then I'll talk about the differences. So our team will do captive pricing, captive reserving. So those are very similar to what you'll get in a normal insurance company. We'll also provide analytics for all of our insurance decisions that we make. And then we'll also are responsible for all the systems that we use. So whether it's like making sure that a RIMIS, a risk management information system, is working well, or that a chatbot is working well, our team will oversee all of that. Now, what's very different, and those are, I think you could say, somewhat traditional when you compare it to a normal insurance company. What's very different is the partnership with the business. So examples are cybersecurity is a field which there's a bunch of data. There's a lot of data. There's a lot of alerts. And generally speaking, a lot of professionals, cybersecurity professionals, are really looking to try to understand how to better quantify that data. One of the things that we work on at Google is partnering with that team to apply actuarial principles to what they're doing to help improve their modeling and their understanding of their own data. And then I think over time, and this is something that we're working on, but over time, you'll then have a model that benefits them at a very detailed level, and that also benefits the insurance purchasing decisions. And in that sort of exposure, I think, is hard to get elsewhere, where you're really like in the weeds with another group and understanding the details of their risk at a base level. Well, we do that across the board with a lot of different business units. So how do we think about how to help drive a better model that can drive business decisions in addition to insurance purchasing decisions? And I think that's probably the most different piece of what we work on.
So you talked about, kind of bringing it back to something you mentioned earlier, as being more of a risk manager and looking at that broader, enterprise piece and the risks as an organization. So what are some of the key ones that, that you've been focused on or that you've been exposed to in the
What
past?
the key risks?
Yeah, like specifically in terms of your role. that you're looking at as a risk manager at Google?
Yeah, so I'll talk. I think if you think this is right moment, I'll talk a little bit about the risk protection program because I think that
Sure.
encompasses a lot of it. So one of the main things that I work on, being leading risk and insurance for Google Cloud, is of course cyber risk, right? Cyber risk for the company, cyber risk for our customers. Trying to understand how do we drive better security to drive down cyber risk generally. And one of the projects that we started working on, I've been working on it for 6 years, but it's been live since 2021, is there a way where we can help drive the cyber insurance industry forward by providing analytics similar to how auto insurance went from how many miles are you driving to usage-based insurance and telematics in your car? Can we do the same thing in the cyber insurance space? Now, if we can do that in the cyber insurance space, we can get to a place where the more secure a customer is and the more secure the cloud provider is, the better insurance you're getting as a result through pricing and through coverage. And so that's an area where it's definitely not a traditional risk management project, but it is an area that a risk management department can provide a lot of insight to the business and ultimately help come up with a kind of industry breaking new product that will help the risk of ourselves and of our customers. So that's maybe one example. Let me think if there's other examples of, I definitely am involved in a lot of like insurance placement that will include a bunch of different risks, but typically my expertise lies on the cyber side and the cybersecurity side.
Yeah. Now, within the context of cyber risk, which you mentioned, I know we'll get into that a bit more. You talked about the cloud, which I'm glad that you brought that up. And I know you've become an expert in this area. Like you said, I've seen you speak at conferences on it. I remember, I think at Riskworld, you gave a joint presentation with a couple of folks from Google on the cloud. And this is very relevant. I'm in the software space and customers talk about it all the time. They're modernizing, they're moving to the cloud. And there may be actuaries and other risk professionals who are not as close to that conversation because perhaps they're not as close to technology. So the cloud is a term that's very common today in the technology world. Now, how do you describe the cloud and why it's relevant?
Yeah, so the cloud is a global network of remote servers that like store and manage data, run applications, deliver content and services over the internet. And it's basically, a lot of companies have what we call on-premise infrastructure. So they have all of their data servers and computers within their own, maybe even on their own floor, right, within their own space. The cloud is just shifting that to another organization who, in theory, in many different examples, can run and manage that better. It will allow customers to scale more quickly. They can scale up, they can scale down. There's a bunch of different benefits of why to move to the cloud. But I think the term the cloud makes it seem a little bit more elusive, but it's just providing services through compute services for customers.
I remember one example, and correct me if I'm wrong. I think it might have been at Riskworld or one of the panels you were on. I think you mentioned like Gmail is like an example of is like a cloud application. Would that be fair to say?
Yes, yeah. So Gmail is cloud-based, so that's definitely true. But when I'm buying cloud services, so Workspace is the enterprise version of Gmail. So if I was a company and I wanted Gmail for my company, I'd buy Workspace. That's more like a software application at the end of the day, whereas cloud computing services, you could build your whole IT environment in the cloud. So there's a range of infrastructure as a service, platform as a service, and software as a service, and then the cloud can encompass all of that, whereas Gmail's a single application, if that makes sense. But I think what we probably, this is maybe a tangent, but I think probably what came up there is that, and we can talk more about this, is that when you have a cloud-based application, in my opinion, there's a direct link to security of that service. And the reason why is that when you need to patch something or update something, if it's cloud-based and there's a vulnerability that's found, the time between when the vulnerability is found, how to fix it, and when it's patched is very short. But if it's not cloud-based, you really need a human to go into your IT infrastructure and fix it and make the patch. And so oftentimes there's a longer lag, and that creates a bigger window for attackers to get in. And that's probably the context in which I was talking about Gmail. The Workspace has gotten a lot of recognition for their leadership and security, and we tend to talk about it when it makes sense.
And that's actually a good segue. I was just going to ask about that. Is security, when we think of the cloud, certainly there's, for various reasons, scalability, flexibility, but security, of course, and when we think of cyber risk and security itself, cybersecurity, that's always a concern, I think, for customers. So when you think of the cloud versus on-prem, you just mentioned that when there's that issue with the detection, it sounds like the lag between detection and resolution is lower when it comes to the cloud. Are there any other considerations when you think of the ways in which cloud versus on-prem, whether cloud may be more or less secure?
Yeah, definitely. So there's an article that we put out that maybe we can link to when you send
Sure.
this out, that is called 9 security megatrends that drive cloud adoption between, and it talks about the widening gap between security from a cloud environment and an on-prem environment. And just to highlight 2 examples of that, one of them is that in an on-prem environment, I'm a single company, I own the entire IT infrastructure, for example, and the cost of implementing really high-end security features is going to be higher than if I am a cloud company who's amortizing that cost across a whole fleet of servers, right? And so the marginal cost of security starts to be driven downwards when you're scaling in a cloud environment as opposed to an on-prem environment. And the more companies that shift to cloud, the more that marginal cost of security is driven down. And so there's naturally an incentive. You're always kind of thinking about how much do I invest in security, and you're thinking about the return and the cost. When it's a lot cheaper to do so, you're investing much more, right? And so that's one really non-technical example that just shows the forces that are at play that are helping drive better security for the cloud. Another one is a concept of a digital immune system. So just like us from a health perspective, when you get sick, you build out immunity and then you know how to fight that. There's a similar concept within the cybersecurity space and kind of fighting attackers and fighting different vulnerabilities. And the scale of cloud providers allows them to invest in a lot of different teams that are researching this stuff. So whether it's a threat research team or a red team or a team trying to find bugs in our own products, whatever it might be, there's a lot of knowledge that then gets captured and then scaled across for all of our customers. And so developing a stronger digital immune system is something that will allow cloud providers to be more and more secure over time, whereas companies with an on-prem infrastructure, you're really just relying on the security professionals you're hiring, which is going to naturally be smaller than a company that's job is to provide these services. So there's 9 of those. I think they vary in technical complexity. I picked the ones that are a little bit easier to understand, but they generally are written in business terms so that a non-security professional can understand them. And I think that it makes a compelling case for why security on the cloud is trending in the right direction.
Great, that was helpful. So we talked a bit about cybersecurity, of course, which is instrumental when we think about the cloud itself. When we take a step back and think of things more high level, so given the importance of the cloud, what specific risks do companies face when adopting cloud solutions, and how can they be managed? So we talked a little bit again about cybersecurity. I can think of even to my company, there's hosted managed services, when you're hosting somebody in your cloud. Microsoft Azure does that. There's various companies, Google, of course, there's various companies that will provide those type of services. But outside of the cybersecurity or adjacent to that, are there any other risks to consider when companies are adopting cloud solutions?
Yeah, I think companies will be thinking about a variety of things. So security is definitely one of them. Reliability is another one. So how do I make sure that the service is reliable? In certain industries, there's a really big need for constant reliability. So think about like companies that are trading, like trading platforms, right? From a financial perspective, the if there's a 2-second delay or a 3-second delay, oftentimes that matters. So trying to understand the reliability of a cloud provider and a partner that you're working with to make sure that your business won't be impacted as a result, and what we call SLAs, what service level agreements can you agree to? That's another thing they're looking at. Third-party risk more broadly is something that companies will be thinking about, just in terms of right now with a lot of recent attacks, there's a focus on who's in your supply chain, what's the quality of their own security, but also reliability, right? The CrowdStrike event, as an example, was not a security incident, but it affected a lot of customers. So just trying to understand that more broadly. And then, of course, there's questions, and I'm not the best person to go to do a deep dive into this, but there's questions like data residency that often come up when you're thinking about what cloud provider to select. So trying to make sure that your data stays in the same country that it's in, if that's important to you for one reason or another, or there's a government regulation. And then, yeah, we have a lot of trust and safety teams too that are just embedded throughout Google that often answer a lot of questions for customers on things like that.
Sure. Now, shifting back to cybersecurity, at a high level, what does cyber risk quantification? I imagine, of course, you're very focused on cybersecurity, and quantification is very important for risk management in general. So what does cyber risk quantification involve?
Yeah, so it'd be similar when you think about cyber risk quantification to regular quantification. You're trying to identify, okay, what's the frequency of an event? What's the severity of that event? And then putting it together, modeling it through, let's say, Monte Carlo simulation, and coming up with a distribution. But when we were to double click on that, oftentimes when you're thinking about the frequency of an event, you want to try to take into account all the different security products and tools and security by design that you have within your infrastructure, to make sure that if we're deploying something like MFA as a very easy example, that you're taking that into account in the modeling, because there is going to be a difference of a customer that uses MFA or a customer that doesn't. So I think what's harder about cyber risk quantification is that there's a lot of different variables that are at play, and it's not yet known within the industry, I'd say, to try to identify what variables matter most. There was recently, I didn't anticipate speaking about this, so I'm a little rough on it, but there was recently a study that was put out by 𝗠𝗃, and I saw it on LinkedIn, about how within the cyber insurance space, or cyber risk space, there's not a single metric that matters. It's really the correlation between a bunch of different metrics that matter, almost coming up with like a score type of framework. And so I think there's a lot to look at, but generally speaking, I'd split it into the frequency and severity, and then I'd also split it into security and then reliability, because business interruption is a big loss that occurs that's not always driven by a security incident, again, as you could see from the CrowdStrike event.
Great. So it would be fair to say that, like in insurance, when we have a common metrics like loss ratios, it sounds like when it comes to cybersecurity, there's a series of general things that people look at, but it's really more proprietary in nature in terms of how it's kind of measured and managed. Would that be fair to say?
Yeah, that's fair to say. I think loss ratios is almost like the result, right? It's the KPI. I guess what's similar is a loss ratio is the KPI that an insurance company is working towards. A cybersecurity team doesn't have as straightforward of a single KPI. Yeah, I think I'm just talking out loud now and thinking out loud to respond to your question. They do have a bunch of different metrics that they're tracking, and I think that's true. But it's an evolving space. You're seeing a lot of interest in the cybersecurity community about better quantifying risk. There's a framework called FAIR that came out that is, I think, very friendly towards the cyber security community, because it'll define distributions for you, and then you just put in a couple metrics, and then it'll help you model out that risk. And yeah, there's a lot of companies also popping up in this space.
Okay, interesting.
Yeah.
Now, something that you're known for publicly is using your expertise. Sorry, it's your expertise for using something called InsideOUT data services through a Google partnership. So can you tell us a little bit, how do you describe InsideOUT data services?
Yeah, absolutely. So inside out data, what we often use that term for, is metrics from within a company's IT environment. So this concept of a firewall, of what's inside the firewall and then what's outside the firewall, is where this term came from. Now, what's happening today, and that's very widely prevalent in cyber insurance, is this idea of an outside-in scan. And what that means is that from the outside, you can scan a company and you're essentially seeing what a hacker sees. And you're trying to say, okay, they have an open port here, or they have this Gmail group is publicly available, or whatever it is. You're scanning from the outside. You don't have to talk to anyone within the company. You can, many insurers and cybersecurity firms are doing this without any consent, right? Now, the difference is that a lot of times things might be public for a reason, right? There might be a reason that this port is open, or this thing is public, or whatever it might be. And so you can't really tell whether a company has good cybersecurity from that scan alone, because there might be reasons that it is that way, and it doesn't mean it's unsafe in those exceptions. So there's this trend that's happening, and I was early on in this trend, but it's definitely more than just the risk protection program at this point in time. There's a trend that's happening that's trying to say, okay, how can we get metrics from within a company's cloud environment and use that to rate and underwrite cyber insurance? And so that's this concept of inside out data. It's the same metrics that a security team is using to manage their own risk. And how do we bring that into the pricing process such that we have a better process for all?
And would it be fair to say the scope of it, you mentioned cybersecurity, is it primarily for cybersecurity purposes, or is that data used for any other use cases?
The scope of the inside out data?
Yes.
So it's a good question. You could actually use inside out data for anything, right? So inside out data could be like one example in the reliability space might be what data centers are you using, what products are in each data center, right? There might be some of that you can get from the outside in, but the nuance of it, you'd have to talk to someone to try to, or do a scan to try to get. So it could be beyond just security, it could be reliability, but we at this point in time are using it more from a security perspective, because I think it's a little bit more straightforward.
Mm-hmm. Now, when I think of your role there, just trying to think of how you're adding value specifically, I imagine, of course, the analysis, quantification, some of the qualitative analysis. Are there any specific areas where you'd say that you're adding value, just given your background and being in this role, as it relates to inside out data?
Yeah, I think where we're adding value is bringing this to the insurance industry for the first time, and working with our partner insurers to try to understand how they can incorporate this into their pricing models. I think that's a big change. It hadn't been done before, and it's really leveraging our position as a cloud provider that we have I guess, good integration with a lot of companies and a lot of trust with those companies, such that it makes it easier for them to run a scan within Google Cloud than maybe get a third-party product to incorporate. They're already using Google Cloud for their day-to-day. And so I think that that's where value is added to the program, is that it's already in their day-to-day environment. They just click a button, run a scan, understand those metrics, and then share them. And so it just streamlines the process.
Okay, well, that sounds interesting. Value-added services. So
Definitely.
technology, we're talking about technology, of course. Google's a technology firm. So how is technology being utilized to add value in the risk management space? I know it's a very broad question, and we probably addressed some of these things, but when you think of just specifically technology, I guess the inside out is actually maybe one example of how you're extracting information and helping with quantification of risk. But Can you think of any other ways from a technology perspective, how it's being utilized to add value in the risk management space?
Yeah, so this one, I'm actually going to diverge a little bit from Google because it was just such a good question for another thing that I'm involved in. I'm an advisor at a company called Voxel AI. And what they do is they use AI-powered security cameras to detect hazards and inefficiencies in real time within an environment. So let's say you're working at a manufacturer, you deploy Voxel AI, and it will detect when somebody doesn't have a hard hat on, or they're not bending the right way, they're not bending forward the right way, or they forgot to do something that is very important from a security perspective. And these cameras will identify these things and then in real time drive a stronger safety and security culture by showing, I guess, illuminating to managers what's happening, showing the near misses that happened, and trying to develop that feedback loop. And so I think it's a great example of how technology is being used to add value in risk management. Risk managers are benefiting from that. Their losses are going down as a result. Then ideally their insurance goes down as a result. So that's one that's big in the casualty world. In the cybersecurity world, it's similar to what we're doing. There's technology that's automating that. And I think just more broadly, we're seeing more and more across all different lines of business areas where technology can help with underwriting in a way that we hadn't really seen before. Although I think the insurance industry still has a way to go to really develop and lean on technology to the full extent.
No, technology and innovation go hand in hand. And earlier on in the conversation, actually, you talked about, I like the analogy you used with innovation. You mentioned that bringing that actuarial background from the insurance space now into the technology space, you can get innovation by combining a few of those domains. Now, more broadly speaking, how can actuaries help tech companies to innovate, to better manage risk? Of course, they're bringing some of that domain knowledge, but specifically, is there anything more specific you can say about that?
Yeah, I think there's two things that come to mind. One is just helping equip the business with better quantification. I think that is an area where once you start to quantify some of the things that they're doing, they'll be able to, it fuels innovation a little bit more because they'll be able to have the data and the numbers behind a decision they're making. The other one is using analytics to support sales in a way. So this one, if you think about Volvo, for example, Volvo is very well known as one of the safest brands, right, from a car perspective. And I think there was I haven't done a case study on Volvo, but I think there was a lot of intention in that. Not only did they focus on safety, but I think at one point in time, they were very outspoken about how much they're investing in safety and security. That mindset hasn't yet been adopted in the technology space of trying to compare one technology provider to another, where one is a lot more safe, like a Volvo versus a Jeep. But in the technology space, you're not necessarily comparing providers in that same way. I think an area where actuaries can help and really drive better innovation is by starting to put numbers behind things like the security of different vendors. You'll see two companies, Coalition and 𝗟𝗶𝘃, cyber insurance companies that started to do this, that show, and I can't quote the exact numbers here, but show something like Google Workspace is X amount more secure than another competitor, and therefore will drive down premium. I think as soon as you start to put numbers to that, then it becomes a business selling point. And so that's one area where I think we can help companies innovate in a way that wasn't expected in the past.
That's it's funny you mentioned that, because I was going to ask a more specific question.
Yeah.
Certainly from me, for instance, being in the software space, there's a concept which I'm sure you've heard of called value engineering. So it's like, okay, I purchase the software, what do I get? So if you think of it, maybe in insurance terms, am I going to reduce my total cost of ownership? Am I going to improve my combined ratio, my loss ratio, etc.? So when we think of technology more broadly, how do you think of measuring, or how do you measure the effectiveness of technology utilized in risk management. I think that it sounded like a little bit of a similar example or similar concept. Any thoughts on that in terms of
That one's hard.
measuring? Yeah.
How do you measure technology? Say the question again.
Yeah. How do you measure the effectiveness of technology utilized in risk management? So for instance, if you purchase technology to address a particular area of
Yes.
risk management, how do you measure that effectiveness? Because in some cases, things are easy to quantify, but in other cases, they may not, just because they lie on that risk management spectrum. So any
Definitely.
thoughts on just that?
Yeah, I mean, I think what you're getting at is almost like a return on investment or an ROI of
Yeah,
the purchase.
essentially. Yeah, I guess
Yeah,
you could
and
say.
I think about that often. I think it's hard. It depends on the situation, right? But through coming up with these models, whether they're based off of your actual losses, which would be a clear ROI on an investment, or based on a model, at least you can help to better quantify how that technology adoption has helped you from a risk perspective. But I don't have an easy answer, but I definitely think that without the existence of risk models, you can never really develop that ROI because it's random, right? One customer might invest in technology and have no change in losses, and another might have a drastic decrease. And it might just be because of random volatility. It might not actually be because maybe it reduced the risk in both situations. So I think the existence of a risk model is pretty important. Even though every model is going to be wrong in many cases, it's just hopefully on the average.
That's definitely a good point, and it's certainly a challenge that I see certainly in the insurance space of software. Is like, how do you like? I'll use an adjacent example is banking. I think banking is a bit more straightforward because the business model is a bit more linear. So for instance, if you can process a certain amount of applications in a certain amount of time, then you're going to have more revenue. If you can more easily detect fraud, repayment risk, default risk. If you can project that better, then you're probably going to, have less defaults, or you're going to be able to have more recovery. So I think in banking, it's a little bit more linear, but when we get to insurance, it's a little bit more complicated because, like you said, there's many different drivers of loss other
Exactly.
than, just experiences. So
Yeah.
um,
And the more complicated the risk is, the more unique the company is. I think it gets harder and harder. But if you don't start coming up with a model, then you'll never really get to the place where you're understanding the risk in detail.
Sure. No, as an actuary, whether you work in an insurance company, consulting firm, wherever, you work with different stakeholders, and cross-functional collaboration is important to be successful in any role. But specifically in tech, who would you say are your primary business partners?
Yeah, so in tech as a risk manager, it's legal and finance. I never thought about insurance this way before I joined a company, but I always now say that insurance is the intersection of legal and finance, right? It's a legal contract, but it's ultimately a financial product in terms of trying to mitigate volatility of your balance sheet. And so when you're working as a traditional risk manager, those are your two main groups. Of course, there's the safety groups and the risk groups that you'll also be collaborating with. But from a strict business perspective, those are the two. In my role, because of the uniqueness of the risk protection program and other things we're doing on the cybersecurity space, I often work with the CISO's team as well, the Chief Information Security Officer. I work with product teams, so companies that business units that are developing different products, right, and want to understand the risk of those. And then at Google, we have a lot of distributed risk teams. So maybe another company might have a single chief risk officer, and every risk role rolls up into them. We have risk people embedded into all different parts of the business, and so there's a lot of collaboration with them. But when I first joined, and I was less on the innovation front and more on the insurance placement front, it was mostly legal and finance.
Interesting. Now, what have you found to be, key to effective collaboration, as you work with legal and finance?
Yeah, so I like this a lot because I actually spend a lot of time working cross-functionally at Google. There's this Harvard Business Review article that was created, and I think it was the title was about managing a company that has a lot of different silos. And one of the things that they brought up is this idea of cultural brokers, which are people who excel at collaborating across different cultures. And developing relationships that span a lot of different areas. And to me, that's probably one of the most important things with regards to collaboration is when you're thinking about designing your team or when you're thinking about you as an individual, making sure that you're putting people in roles that are specifically focused on that cross-functional collaboration. And in this case, they use a cultural broker as the name for that role. But it could just be spending time to think about, oh, I need to actually not just stay in my silo and work with different areas. Expanding on that, there's two things that I think have helped me a lot. One is making sure that you're always shifting your perspective. So you could come to the table and say, hey, this is a risky thing to do. We should never do it, right? The other person on the other side of the table is going to say, like, this is going to drastically transform the future of the company and the upside is tremendous, right? And are you really going to stop them because of the risk of it? So making sure you're wearing the different hats and thinking about, okay, this actually is really good for the company in these ways. It might be risky in these other ways. So how do we think about a middle ground? And so that shift in perspective is important. The second thing, which I've already touched upon a little bit, is focusing on what's best for the company. So rather than just focusing on what's best for your division, if you always anchor to here's where we're going as a company and here's what's best, whether it's through mitigating the risk or enabling innovation, I think you'll get to a better place over time and you'll strengthen those relationships cross-functionally.
One thing I'll just quickly add to that as someone who's in a space that's non-traditional as well is I think it's important to be, and you did kind of allude to this, is to be a trusted advisor. So to develop a good
Yes.
relationship, because when you're not working in a place like insurance, when you're working kind of outside of the space, people rely very heavily on you. When you're in a place where people may not understand insurance and risk management as much, you are the expert. Some people, like for instance, I started my career working at a company with 200 plus actuaries. So they're a dime a dozen. There's lots of people to rely on, but relatively speaking, when you go outside of that comfort zone, there's a lot more reliance placed on you. So work to become a trusted advisor and develop good relationships. I think that can serve you in any
Definitely.
role. So
yeah, I think you've put it succinctly, and that's exactly kind of what I'm pointing to. So that's great.
Great. So, we've touched on quite a bit today, Monica. We've talked about risk management, what it means, the risk landscape itself, what the risk management role looks like, and how that may be different for an actuary moving from a traditional space, the cloud and cybersecurity, and its prevalence in the technology world. We've talked about technology and using that to add value for risk management, and finally, just the importance of collaboration. So I think this will be, a great episode for the community, and just looking forward to sharing it, and want to thank you so much for your time and sharing your expertise.
Excellent. Thank you so much. I'm very happy to be here and very excited to be part of this. So thank you.
You're welcome. Have a great weekend.
You too.
Bye.
Bye.